Hey everyone, Nick Shane here looking at Microsoft. I don't remember ever doing a video, or at least not recently, on Microsoft, but it came up as questions from members in the chat room. So speaking of, down below in the description there's a link to the chat room to try it out for free. We have hundreds of people all looking for breakouts, breakdowns, and trade ideas. I moderate, but everybody contributes, and it's a ton of fun. And since nobody's working, try it out. All right, commercial is over. So this is a breakout on the ASK. All right, I'm going to pause it. Hold on. I was waiting for this. Okay, I'm back. All right, so I had to share it. It was a small breakout based on some level and some harmonics. Okay. All right, so back to Microsoft, and I hear the pundits and on TV, saying after the fact, I bought it and I whatever. So down here, when everybody was scared crapless, nobody had the balls on CNBC to say buy it. Now they say, oh, I bought it back here and I sold it and I'm trading around it. Meanwhile, they spent hours on TV debating why the market fell. Not one time did anybody say buy this or buy that. Not even when Boeing hit $89 or $90. Nobody had the balls to come out and say buy it. It's a blind buy, especially when the president said, we will help Boeing. That was I posted it, sell puts if you don't want to buy it. Anyway, so after the fact, people are geniuses. So what about now? Do I buy it? Like whatever his name is, Set. He said he bought it, he sold out of it, he kept a little bit of it. Could you be more ambiguous? Maybe it'll go up, maybe it'll go down. How about telling me, is this a good spot to buy, and what are my odds, and what are the levels I should be looking for? All right, so that's what I'm going to try to do. I'm not going to say buy it or sell it. I'm going to tell you what the levels are and where it should find resistance, where it has support. However way people trade are different. I like to sell puts and put spreads. I don't like to buy stuff. People love to buy stuff, and here are the levels that matter. Just by looking at it, I can tell you that this is not an obvious entry point all by itself. Forget the whole market, because we had a fall from here to here. They recovered half of it, and this is where they encounter some resistance. So they need to either consolidate or give back a little bit and then make the second push. So, and even so, then the upside is from here to here visually, right? And the downside is smaller. Why? Because of this orange line. What is this? This is 4-hour chart. So every candle is 4 hours. And so this is a lot of action down here, that yellow line. It's a lot of consolidation. That whole zone has had a good time to trade. So on the way down, it should find support, or it should provide support. So this would be the worst case scenario, the bad scenario. And this would be the worst case scenario, because here everything was going wrong. The whole world was ending. Zombies were going to walk the streets. So that's how I think about it. For it to lose this number here, we need a new shoe to drop. Something like COVID, China restarting the COVID in a mutated fashion, for example. A president dying, for example, God forbid. But anyway, so something like that. Also, this is, for the same reason that this is support, this is resistance. Because if you look here, these highlighted yellow, that's the volume profile. So it tells me in this area here was most of the trading. So they fell back into it. On the way up, they can't just bust through the lid, because that's where they want to be. That's what the volume thing on the left is telling us. That is where they want to be. So to get out of it, they need a reason. So what's the reason? So I can tell you, blindly, for me, I'm not going to buy it unless it goes above there. That's where it failed. Prove to me that you're not going to fail again. And in fact, if you look at it, if anybody's had 2 minutes of listening to a technician, you would have heard inverse head and shoulders or cup and handle. So the idea is both of these are the same idea, not the same shape. Inverse head and shoulders looks like this. You got shoulder, head, and this is developing, the right shoulder. So this is bullish. Usually they rally about this much once they breach. Okay, so in theory, that if they break this, they should beat that, in theory. This is not an inverse head and shoulders, because technicians will say, what about that peak? Then you'd have to draw it sideways like this. So their trigger line would be here. I prefer level triggers, not trend line triggers. So this would be a trend line trigger, like starting from here, or a level trigger starting from Everybody's at home, makes it difficult to get quiet. Okay, so breakout from here as a level break rather than a trend line break. I hope you know the difference of what I just said. All right, I'm going to take it out. And let's see here. So the breakout is that. So if you consider that this is a cup and handle with a really deep cup, same concept. The breakout is the depth of the cup. So the bottom line is, if you break out of that zone, it could rally. I can tell you it's going to find resistance right here. That's first level of resistance. So if I'm long and I'm scalping, I would get out anywhere near 176. A second level of resistance would be anywhere near 180. And then this whole zone is resistive just from the fact that it was a major top up here, all of it. I'll pay attention to that candle right there. You know, they lost it convincingly, and then they came back and took it out. So overshoot. So instinct, I drew it here. That was right. So I'm going to put that as a line of interest. So I've got 176, 180, and 184. These are the three exit points. So if I'm long, I would, you know, trim 1/3, 25% or whatever, get my money back. Here, I would book a lot of it, leave some runners. If you look at it, it looks like a, I don't want to call it ABC push. I'm not an expert at it, but they pushed one time, they breathed or consolidated sideways, and then pushed the second time. So this is the upside potential. Downside potential, so this is where I would chase it. Breakout. That's one. Or I would wait. If it falls to this area, I didn't draw this by accident. This was a prior level. So towards 160, 156, it's buyable on the dip. It's not a perfect bottom. I don't know where it's going to bottom. If I were to pick a perfect line, it'll be 160. But it's not a perfect, look at this, 160. So it has been pivotal. So that would be the line I'd pick. So that would be one place machines will start buying it again to try to stabilize it. If they want to go further, 153 would be another place I would add or start. Depends on my time frame. If I'm a longer time frame, I'm not rushing at 160. So I could sell put spreads behind these lines and generate income that way. Knowing that worst case scenario, I'll just buy the shares at 160 if they hit that leg. Instead of taking the loss on the put spread, I'll just own the shares. So that would be the idea of playing it that way. So levels, breakout, levels to buy it for a long. Where do I short it? I don't want to short it. Why would I want to short it? I might as well short the whole market. If the market is rallying, this one's not going to be falling. These are the opinions on this Microsoft. So I'm going to put my drawings back on and see how close and consistent I've been. All right. So these are boxes I drew from before. I drew this box for a very specific reason. This candle right there. I'm glad I'm on the 240. This candle right there, the edges of that box. So if I'm going to extend it, I don't trust myself to extend it manually. I'm going to say 310. Hopefully that'll do it. There we go. I'm going to extend this box, which I also drew a while back. I'll say 310 as well. Look how pivotal they have been. The range is still holding, and this is in the middle of the range, so I have no action. It hasn't lost the short-term support. It hasn't broken out of the short-term resistance. So it's in a no man's land if you're trading. If you're looking for an investment entry point, I'm not rushing up here. At least I want to see either upside momentum or the market rallying, and I'll take it with it once it crosses this line, or on a better dip if I didn't buy it here. But definitely, clearly, the easiest thing to say is, oh, I bought it back then. So let's go out to a daily chart, which most everybody watches, and I'm going to reset it. All right, so now we have levels. Now I can speak more to it real quickly, though. So nothing is... the same concept I used here is applying here. So why did it stop here? Look at all this volume. So how much more bad news is it going to take out all this volume? This battle was fierce. So here's the idea. It fell, not a coincidence where it stopped. Look left. This was a long consolidation zone. Look at this line and look at that line. This is where most of the action happened in the last 12 months. So if they fell into it, it's going to provide support. That's the same reason I said up here, if it's falling into support, right? Same concept, higher time frame. I'm going to extend it one more time. So this is a weekly chart with 5 years of data. So now you can see where most of the action is down here. Why? Because it needs time for it to move up, to consolidate up here, so it has more chance that these bars grow, because these are not growing. That's done. So these start to grow. So it needs time to, quote, consolidate. That's what that means. Time passing so these bars can grow. And then they become more significant. So at this point, this consolidation zone is pretty long, as I showed you on the daily chart. That's why this holds. For this to be, for a catastrophe, this has to be lost. So I'll put here, and I'll put the, oh shit, moment. Uh-oh, he used the S word. All right, so I know this is a big range, but if I'm a long-term investor, that's really the only two I care about. This changes the game. This makes me more excited. All right, Nick signing out. Subscribe to the YouTube channel too.